Hi everyone, Ricardo Gonçalves with SBS On The Money from the SBS newsroom for this Monday, the 30th of November 2020. It is your daily 10-minute business and finance news wrap. Later, COVID-19 and Qantas staff numbers are now down by a third when compared with the pre-COVID levels. But first to the Australian share market, because it's the end of the month and the ASX has had one of its best months in a decade. When you take a look at the S&P ASX 200, it's up 10% in November for its best performance since the index's inception in March 2000. So for more on that and where to now, I spoke earlier with Matthew Haupt from Wilson Asset Management. Matt, shares are up more than 10% in November. How would you describe that performance?
Yeah, it's been a very pleasant surprise this month. I guess the key thing is the better than expected vaccine news, which has been driving markets higher. And I guess the move in Australia has been amplified because of the positioning, which has been very overcrowded in consensus trades like tech and long duration trades. So the Aussie market has benefited from financials, materials, and some of the more cyclical names.
What about other key factors? I mean, we've seen the markets awash with all this stimulus, fiscal, monetary, the US presidential election as well. How much has that flowed through to sentiment and gains in the market?
Yeah, I think all those things have obviously had an influence, but more those influences were early on. So regarding liquidity, which has driven through the market. But it's really the vaccine news which has driven the mass rotation we've seen this month, which has broken all the previous records we've seen as far as if you talk about standard deviation events. It's you're not meant to see this once in a billion years or something. So the rotation has been dramatic and fast.
So then short to medium term then, is everything hinged on, I guess, maybe the speed of the rollout of the vaccine when it comes to market reaction and growth?
Yeah, I think the speed is obviously an important factor, but as long as the dream is alive of the vaccines working, I think the market will look past the speed, because we know the economic conditions are terrible at the moment and getting worse with the virus, which has been spreading quite rapidly. So I think as long as the dream is kept intact around the efficacy of the vaccines, I think the market will look past the speed and look forward to a couple of years out where we'd expect more normal conditions around economic activities.
So given all of that and that solid 10-11% rise in the 200 in November, what are you expecting in December? Because typically we'd see a Santa rally. Could we even reach those record highs we saw back in March?
Yeah, it's a very interesting question, and obviously one we're debating at the moment and the rest of the market. After the massive rise we've seen, has that pulled forward the normal end-of-year rally? And again, I think if we get more positive news on the vaccine around potential rollouts, which we're likely to see in the next few days or weeks, I think we can still rally into the end of the year. And again, it will be very much around the cyclical sectors, because we did see a sharp rebound in the rotation in November, but I still think there is still trillions of dollars left in old positions around those tech and long duration. So I think the rotation could happen and will be an important part for driving the market higher. If we don't see the rotation and some bad news on vaccines, I think the whole market will fall. There won't be a rotation. I think the whole market will fall.
How serious could that fall be?
Well, it could be quite serious. Obviously, we've seen a big rebound, so you could expect a 10 to 15% fall pretty rapidly, I'd say. But I guess with the vaccine now, we have 3 candidates, so the likelihood of getting a scenario where we go back to no vaccine is very, very unlikely. So I think what we'll see is incrementally negative news being the worst case, and a sharp retrace as people would try to rotate, but ultimately I think the market would fall. But as we've seen, markets have been held up by fiscal and monetary policy, and in the event the vaccine doesn't work, the monetary and fiscal will start kicking back in again. But that will not drive the market higher. That will hold the market where it's at.
And how are you guys positioning yourselves right now?
Yeah, so we're still pretty fully invested, and we've been in position more so on the contrarian value side of the equation. So the first quarter of the year was fairly tough, but we managed to keep ahead of the market. But this month has been a very good month for stocks that we're in. So, and we're going to position ourselves on an economic rebound. So we'll participate in cyclical companies, still like some of the materials. We like energy, as long as OPEC plus holds together, which we've got a meeting coming up. So I think energy is a natural sector to attract capital. With the demand destruction of energy, there was about 10 to 15 million barrels of demand destruction, but that will slowly return, especially if we get the positive vaccine news.
Matthew Haupt there from Wilson Asset Management. Now, the irony is, even though the share market rose the best it has, the 200 anyway, ever since its inception for the month of November, the market had its worst one-day fall this month today. The S&P ASX 200 down by 1.26% to 6,517. The banks, one of the major casualties, CBA off by 2%, CSL losing 1.9%. BHP also declined 1.7%, and Whitehaven Coal, a big loser, off by 9.6%, but some tech stocks rose. For more on the markets, I spoke earlier with James Rosenberg from EL&C. James, market is down today. Why?
Interesting. It started off quite positive, about 40 points, but saw a sell-off late morning and then into the afternoon. Difficult to point a finger on a specific reason. It could be increased tariffs and other concerns from China. It could be that the US futures fell a little bit, but also it's continued a trend that every month in this financial year, the markets have sold off late. We must remember that it's been an incredibly positive month, up about 11%, so a bit of profit taking doesn't surprise.
Can we talk about a couple of company-specific stories? Treasury Wines, first of all, it continues to underperform.
It does. Treasury's had a difficult time. Last Friday, China announced a big increase in tariffs on Australian wine, and Treasury has about 30% of their earnings coming out of China. So very difficult times for them. The stock has continued to struggle after Friday's sell-off. It'll take them a long time to recapture those markets, to try and build markets elsewhere. They will do it, but it's not going to be a quick fix. And in the meantime, they're going to be left with a glut of wine. Who knows? They might even be putting Grange Hermitage in gurney bags. I doubt it, but you never know.
And what do you make of the way Qantas has been navigating COVID-19? Because today we heard of the airline telling 2,000 of its ground workers anyway that they won't necessarily be needed because they're outsourcing those operations.
So cutting costs and particularly staff has been the go-to for Qantas. It's very difficult for those people who are affected. It should be a good time for Qantas. Their major competitor is in a lot of pain and looks to be emerging into as a low-cost, no-frills airline. So Qantas should have the absolute pick of the high-value travellers. That's a while off. Domestic travel is only just starting to recover. International is going to be a little while down the track. But when they do emerge, it should be good for Qantas. But safety is the number one thing that concerns travellers. I know these are baggage handlers and not safety people, engineers and the like, but they want to be very careful on how they address what is a difficult time for the airline business.
James Rosenberg there from EL&C Baillieu. This week, we should get some more figures on Wednesday from the Bureau of Statistics on GDP numbers, which should show that the Australian economy is technically out of a recession, even though unemployment's still pretty high. But tomorrow we'll get some details on the housing market, some CoreLogic house price details, which would be interesting in the face of what we've seen with the market. I'm Ricardo Gonçalves. You can follow me on Twitter and Instagram at Business Ricardo. Talk to you soon.
This On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It's not personal advice and it doesn't consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.